guys, welcome to the Trading Parrot. Bitcoin pushed to 65k. I have to say that was pretty impressive. The market looks fairly green after that rejection, and there's currently an ongoing battle to decide the future of this breakout. Are we going to get to the higher highs of 70k, or are we going to end up consuming the CME gap that we left over the weekend? I want to talk about that. I want to look where is the liquidity and what's the incentive for the price to continue going higher. A bunch of things are going on as well in the background that you don't want to miss. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit that notification bell so you get notified every time I put out one of these videos. And if you feel like supporting the channel, watch this video until the very end and do not go anywhere without leaving a comment down below. That is really helping the channel to grow. You can see that we are well in the green and we seem to have recovered on most of the coins for the week. For the month, there's still a lot to get done. But the engagement and the interest on Bitcoin right now is at 24, far away from the bottom that we saw at 15 at some point, right after we hit 53k. Guys, yesterday on my Twitter, I published this setup announcing that we had good chances to break above 64k just because we printed a cap and handle in here. I posted it as it was breaking out, and yesterday we ended up hitting way higher than my target. Actually, we consume all the liquidity to the upside. So if, like Brian, you also appreciate this type of content, I invite you to follow me on Twitter. My handle is Trading Parrot. One of the top 3 news for today that we have going on is Empty Gods has moved almost 100,000 Bitcoin, worth 6 billion in the past 2 hours. Lark is classifying this as FUD. Do not panic. But this happened precisely when the price was breaking above 65k. Pretty convenient because that was the moment where we were about to break that psychological level that puts us halfway towards the 70k. But not everything is bearish. We also have big breaking news. ETFs will be going live for trading next week on Tuesday, July 23rd. So this is massive. The past time with the BTC spot ETF went live, we had a little bit of bearishness just because many people were expecting a sell the news event, and also because Bitcoin was rallying towards the ETF going live very short after the price started shooting to new all-time highs. Yesterday, we saw another 1 billion printed in Tether Treasury. I believe they have been printing up to 24 billion so far this year. They usually mint Tether on demand, meaning that people need more USDT, they are buying it to buy more altcoins, to buy more Bitcoin. This is the fuel of the bull market. The ETFs have had now 6 days of buying. Each day pretty much the same amount, around 300 million or 5,000 Bitcoin. You can see here in detail, we started with 143, 294, and yesterday another 300. So yes, guys, we have the CME gap that spans from 57.8 to 61. I'm not necessarily expecting that we are gonna feel it fully, but based on the past performance, I will say that less than 5% of the CME gaps, we just leave them behind. You can see this one here got filled. Week by week, we talk about the CME gaps and they all get filled. The problem is sometimes you leave some gaps like this one that we left at 60.9 and this one was at 62 that they got filled, but after a move to the upside of 17%. That's why I don't encourage you to enter on a short expecting to fill the gap immediately, because you can get stopped out on a massive move to the upside as well before they get filled. And not just that, sometimes there are some gaps that never got filled. We have some historic levels, one at 48k, one at 39k, that they are still waiting there to get filled. In no way I'm guaranteeing that we're gonna go there. I'm just keeping a close eye because we had these 90% chances that we fill it. So I'm even starting to see patterns here, like for example, these head and shoulders. We are seeing some resistance 64.4. So maybe, who knows, there might be still a chance that we break the trend line at 62.6 and we hit that target of 60k, doing a full retest of the breakout from Monday. I want to cover the CPR as well. You can see that just like we said after the breakout, we were going to go to the pivots and we were going to have some resistance there. Not just because we have the pivots, but also because this is an order block. It sold 10k the previous time that we reached that level. So it's not a surprise that we are seeing some turmoil going on in here. The bears and the bulls are fighting to decide whether the price needs to come here for a retest or if we're just gonna cut like butter through the pivots and target the next CPR level, which is currently located just above 70k. Just a reminder that we also have resistance at 77.9 and at 84k. All those levels are on the table for the CPR model in July. Yesterday we talked that the RSI was at levels of 81, which was pretty overextended for the 4 hour, and we came back down for a retest at 62 at some point halfway through the day. So far we are holding this. If we were to close the gap that we left over the weekend, the first thing that needs to happen is the RSI on the 4 hour needs to break down below this level of support. Otherwise it's impossible. If we saw the RSI moving this high, we are probably going to print then also a new high here in the price. Notice that yesterday we entered in the oversold area of the crossfit ratio. That was the perfect timing for a bounce back down. The cyclic high also broke below the band. I want to give an update on what's going on with the RSI daily. You can see that after the breakout, now we are looking for a retest, going with something similar to the plan B that we talked about. We managed to make a close above the trend line, so we are kind of discarding this unless this came back down today and re-enter below 50. I think we are pretty much now leaning towards securing that plan B. If the RSI was to do a full retest right now, that will take us to an RSI of 51. Let's update this to see where is that in the price. You can see that it's around 61.4. Previously, that was our resistance. So if the price saw a rejection at this level of resistance at 64.7 and we were to come back down here and retest 61.4, that will still be considered something healthy. We will be retesting the trend line in here, and also we will be retesting the 200 moving average, which is currently located slightly below 60k. You can see that the trend line that we added yesterday on the daily is being also relevant. Yesterday we were confronting it as a resistance, and now we are testing it as a new support. Hopefully we're gonna hold above 63.3. That will be really bullish. The next bullish level that you need to keep in mind is the point of control located at around 67. This is the most traded level throughout the full range, and probably right now is attracting the price. If we manage to get there, we will be above the CPR levels. That will be very bullish. And I also want to mention that at 67 is where the next liquidity is located on the 4 hour time frame. So we could be headed to target this liquidity next, as long as this head and shoulder doesn't play out. So there you go, you have both narratives. If we were to break below 62.6, we might be target the CME gap. But if now we manage to make a high above 64, 65k, I'm pretty sure that the whales are going to be targeting all this liquidity located here. And from then, it's gonna make it too easy to go for the higher liquidity and the new high. Once you get to these levels, if you consume all this liquidity and you are still above it, that is very likely to create a snowball effect, because these are liquidation levels. And when they are forced closed, that pushes the price aggressively to the upside. By the way, if you want to have access to trading different, there's a new offer starting from yesterday until the 20th of July that's offering 20% off using the link in the description. Guys, we're back into the grid. A few days ago, we were at 25. We made it very quickly into neutral, and now we are back into grid. We spent from the 25th of June until the 13th of July flipping between fear and extreme fear. On the weekly, I'm seeing lots of progress towards our target of getting into 58 weekly RSI. I mentioned that this is a massive level of resistance. We need to overcome that trend line, this trend line. We have a head and shoulders targeting 36. Impossible to tell if that's gonna play out, but at the moment that we get into 58, I'm gonna need all your eyes on this pattern to see how it plays out. Make sure that you're following me on Twitter for daily updates. My handle is Trading Parrot. The miners seem to be getting slightly less pronounced difference here on the two MAs, which is good news. Hopefully, as fast as we open the mouth of these two EMAs, we're going to start closing them. So let's speculate that by the end of July, possibly we might get a buy signal from hash ribbons. This is of course subject to this most recent uptrend can hold these levels and continue going to the upside. The bull market support band is doing precisely what we said. We talk about being below it at this time during the bull market and to expect multiple times to flip above it and below it. What we don't know is how many times we're going to do that, but we say that being at the bottom of the megaphone pattern is one of the best entries, we have to admit, and a conservative entry is a breakout above this megaphone pattern. You can see how in the fair value gaps, we're almost done consuming all the levels in the upside, and we are creating new ones to the downside. If we were to consume this one, that will take us to 61.3K. If you consume this next two, that will consume the full CME gap as well. And for the first time, looking at the 30 days liquidity, we now have more to the downside. Up until 52.7, we have 8 billion to the downside and 5 billion to the upside. On fire charts, you can see how these levels at the top, around 71 to 72K, as the price comes closer, they start to pull out. And in my opinion, that is something good. Interestingly, the 40K level remains there. There are people even more crazy than me trying to fish those levels. I'm still with my order open at 51. I don't have much hope that I'm gonna manage to fill it, but I still have it there just in case. And you can see even after the price is pushing from 59 all the way to 65, there are still orders that open from 53 to 52 expecting to fish those levels. On this last move, we have quite a bunch of shorts liquidated, but not as many longs as there were liquidated on this move of 10K to the downside. And I'm pretty sure in this area here, we're gonna get larger liquidations of short coming in if the price manages to go to 67 and beyond. On high block capital, we can confirm that the 67 is packed with liquidity, and in the last month we have left loads of liquidity at around 52K. It's much easier to see here on the yearly, the one that we left and the one that we seem to go in after right now on the top end. And we were following this signal for quite a while. I told you we were discussing how effective it is to focus on the global longs and shorts using high block capital. I flag all the areas where we get buy signals. For example, there were two signals with some drawdown, but then there was massive big moves to the upside. All of these have humble returns, and the most recent signals that we saw around here, this one there and this one there, will have given you and also some upside. And today we're getting finally active address sentiment indicator to do a bullish cross above the green line. Typically, after seeing something like this, we see a few weeks of upside. This is the conservative entry. The most aggressive entry will have been when Bitcoin price was at around 56K at the bottom of the signal, when we were crossing down at 62K. The monthly stochastic RSI seems to be curving up for potentially putting out a bullish cross at this level. Notice that in the previous bull market, we have a bullish cross at around this level, which signal that we still have loads of upside in the bull market. We even have a bull cross above 20 for the last leg up to 69. So it wouldn't surprise me that somewhere around here we see another bull cross on the monthly stochastic, telling us that we should expect continuation to the upside. These signals are very slow, and hopefully that will make it a lot easier for this to end up producing the cross up. Guys, today I have a new promo for Bybit. If you open a Bybit account using my referral link, you're gonna see this promo that you deposit 100 and you get a position airdrop of $500. I'm gonna leave a link in the description with all the instructions to do that. Guys, thanks so much for watching the video. Remember to hit the like and write down a comment down below. I'll see you in the next one. Bye bye.